Hey guys, it's Boris. Long time ago, when I used to work for FXCM, we used to do a column called Trader Fate where I would review the currency market at the beginning of each week to take a look at the setups, see what was coming up ahead on the calendar, and kind of just basically get a read on where I think things stand. Now that I'm trading multi-assets, I thought it might be a good idea to bring this back. And if you guys like this, let me know in the comments, and I'll be sure to start publishing these on a weekly basis. But let's start this week with just my basic read of the markets. I mean, first of all, foremost and front and center are the two big stories that are affecting all markets, which is number one, the Putin, Ukraine, Russia, Ukraine crisis, which is sort of on off continuously, but just is a slow boil on the risk spectrum and clearly having some impact, especially the fear here is that if they do make a military foray into Ukraine, that's going to affect energy markets, it's going to affect commodity markets, it could affect, especially if it becomes incredibly violent, a much bigger, greater conflagration. For now, though, it seems that the market is just sort of watching it with a wary eye. The other big risk on the calendar is, of course, the Fed, and everybody watching the Fed on the idea that they may go to 50 basis point rate hike and really begin to tighten the economy, pretty much, I think, at a point where it needs it the least. But that's an argument for another time. Regardless, these are the two big stories, and everything else is just a footnote as far as the markets are trading. Now, what's really interesting is when you look at the charts and you look at the assets, the one asset that's supposed to be a great risk protection asset, which is Bitcoin, is actually acting horribly. And it's a perfect testament, in my opinion, to the fact that Bitcoin is essentially a risk-on asset that lives and dies by liquidity. So two things are happening here. Number one, the Fed raising rates absolutely puts a stranglehold on Bitcoin liquidity, because remember, that is an asset that doesn't even pay any kind of a yield. And secondly, the geopolitical tension with Russia and actually the Russian, I think, assault on crypto generally is not good news for crypto overall, because it's, regardless of how well you think it works, it's actually a terrible asset as far as anonymity and protection, as was evidenced by the fact that these two idiots that got busted for stealing $4.5 billion from a crypto exchange that could never actually really spend any of the money doing it. So, without getting into a religious argument about whether crypto is worthwhile as a utility case or not, what's evident in the charts is that the market really, really doesn't like owning it. And Bitcoin looks to me incredibly weak. When you're looking at the bounce indicator here, for example, it's off the highs, couldn't make the 45 highs on the monthly chart, broke the midpoint range over here, and now seems to be inexorably headed towards that 35,000 low level. And Bitcoin is actually the better of the cryptos. It's actually acting better than ETH, which is already, if you look at ETH right now, it's already at the lows over here. Now, in contrast to that, if we look at gold on this chart over here, that's an incredibly bullish chart. I have been certainly no gold bull of gold, but the price action has completely changed my mind to where I used to basically be a seller of rallies to now very much a buyer of dips. I think when you're looking at the gold chart right now here, this is a 4-hour chart on the bounce indicator with pretty much the 1900 as the monthly highs that were probed a couple of days ago. That level gets taken out and held. So let's just say we take out 1900 and hold it on the 4-hour chart. Very, very bullish development. I don't even think you really need to wait for that. We have a nice green candle into the highs over here on the bounce side. That gives me enough confidence that I would actually want to get long here and play for a punt. The punt here is that you have to believe that this is a genuine breakout. Markets are finally beginning to be concerned about inflation. They're finally starting to view gold as sort of the original OG asset that can protect wealth and as a store of value. And simply from a price point of view, there's just nothing on the charts that looks even remotely better than gold. Higher lows, higher highs, taking out the 1900, which we haven't done in a couple of years. You got to be long and strong here with, I would say, 1850, maybe the midpoint range here, let's say 1840 as your natural stop, and looking to see if it could stretch all the way out to 1950. 2000 is the pandemic high. Haven't seen that in a couple of years, but that seems where it's headed. To me, gold is the clearest, strongest chart on the books right now as we're looking at everything else. Now, looking at equities, and let's just also take a look at, we'll take a look at NAS on one side here on this chart, and we'll look at oil on the other side. Now, oil, I am actually bearish on, but it's hard to pull the trigger getting short oil. Although, if you guys watched the trading battle with Brent Donnelly the other day, he made a very eloquent and intelligent case for why he thought oil was grossly overbought and probably pretty much a sell. Having said this, though, you really have to give yourself a massively large stop here. You have to pretty much stay to the monthly highs at around 95.50 if you want to short oil. And to me, shorting oil right now is a very probative trade, meaning that you can get short here, you could get short a little bit more here with a hard stop over here. I would prefer to see the following. If oil can break the midpoint range here, if we could kind of close below 91, if we could actually create a red bounce candle below 91, that would give me a lot more solace on the idea that I think oil is kind of overdone. Remember, it's being nudged by a couple of things. The fact that weather patterns in the U.S. are getting very cold, the fact that Russia is still a serious military sore spot, and there's still possibility here for a final puke higher. But it does look exhausted, and if you're just simply sort of trading on a longer-term fundamental view, you got to believe that oil is tired and looks for a sell. I would be looking for a sell signal here. If I could get one, I would take it. Right now, trying to sell it here is pretty much a guess, but a pretty decent guess if you want to take it. Equities, on the other hand, really don't look good. You'd love to buy the bottom here. You'd love to do a little bit of bottom picking here, but there's nothing showing up in the charts that even remotely gives you any sense of confidence. When you're looking at NAS, we take out the 14,000 level. We are kind of mildly trading over here underneath here. I would say I would need at least a single green candle on a 4-hour chart to give me a mild degree of confidence that we could have a little bit of a bounce here. Equities are definitely oversold, but given the constraints of the Fed, given the cries of war, and the general sense of risk off here, you certainly could tip us further down. The one thing that I think is very positive for equities is that a lot of the option traders, if you're listening to a lot of the financial podcasts over the weekend, have all been saying that the positioning in the options market is actually very positive equities. Too many people have bought puts. When the market owns a ton of insurance, it's almost never going to be a situation that the market is going to go down. So yeah, I'm looking for a bounce, but I'd like to see the bounce occur here on the 4-hour chart, which means basically you'd love to see somewhere, a green candle show up around the 1390. Then we have a reasonable chance maybe to bounce all the way to 1440, 1450 on the midpoint range as far as the NASDAQ goes. And then last but not least, I think the big story, of course, of the week is going to be Kiwi, because everybody is focused. Kiwi was the biggest gainer last week. Let me just pull up the equity chart, the currency charts. And let's talk a little bit about Kiwi as a trade. Oh, I got to go to the majors. Sorry, my apologies. So here's the majors. Let's take a look at it. Kiwi undoubtedly looks very good on the monthly chart. It's above its midpoint, but there are a lot. Actually, let's go to full chart on this on Kiwi and give ourselves a little bit more room. There's a lot of red flags here on this chart that make me very cautious, and I think if I'm going to trade, I'm going to show you what I would love to trade as. So let's take a look here. We get a top here. We have a top here, so effectively a double top, right, into the RBNZ meeting. It kind of feels like the market has priced in whatever RBNZ tightening is going to happen, and maybe the RBNZ is going to be a little bit more hands-off. Now, if this busts through the monthly highs and actually, creates a strong green candle at the highs, I probably would not want to get involved with Kiwi, and I want to give it a little bit more time before it digests the positive news. But it seems like so much of the positive news has already been built into the price, and in fact, we may be primed for a disappointment. Now, the interesting trade here on the disappointment trade, and something that I think is very much out of consensus, is to take a look at the Euro-Kiwi trade. Euro-Kiwi looks horrible. We're at the lows. We're pressing the red candle into the lows. But this is the kind of a selling climax that could be perfect for for a quick flip to the upside. So imagine we have the RBNZ, the market, let's say, takes the Kiwi up and then flushes it back down, and we have a reversal candle that's perhaps green on the Euro Kiwi. I'd be a buyer here. I love buying at the bottoms on a green candle as on a reversal basis, and I think that would be an interesting trade. If you want to be a little bit more conservative, the pound Kiwi trade is already looking like it's bouncing off the bottom here, and you could take this trade perhaps as a stronger bounce back. But honestly, I think the balls to the wall, high risk, high reward trade here is going to be Euro Kiwi out of a consensus, meaning that you want to get long this thing as soon as you get a green candle, because once you do, I have a feeling we're going to get a move all the way up to the 170, maybe even 170.50 on a short squeeze on that pair and a profit taking on the Kiwi dollar. That's the week. That's how I see things shaping up as far as the major events go. I wish you guys the best of luck. Let me know in the comments if you like this. Happy to summarize this for you guys next week as well. Boris Schlossberg, over and out.